April 13th, 2026. We had a continuation of upward momentum today, as you can see. Before the market even opened, we had a knowledge that, hey, we have an upward bias. So if we see upward opportunities, we want to make sure to be striking harder than normal because we have an upward bias. Doesn't that make sense? Isn't that kind of obvious? Look at the momentum. If the momentum is sketchy and not very clear, then you want to have an even bias. You don't want to be one way or the other. We always take trades whether they're short or long, but if it's aligned with the daily momentum, we want to be striking harder than normal. Look, do you see the warning that's being given us? This is a daily chart for the NASDAQ. Do you see the warning? Here it is right here. The volume is decreasing. The volume is decreasing. It just means that we can expect to pull back in a retracement soon, a true retracement, maybe to halfway of this recent run. We might retrace to that halfway point, and that'll happen soon within the next week or two. But we have a decrease in volume. Momentum still staying strong to the upside. That's all we got to remember. Let's go into the trades today and look at what happened. Here's the price action from today. This is a 1 minute chart right here, so you can see we had a nice clean upward move today. Very straightforward, a lot of opportunities that you could have traded. We're going to go into my trades. I took 3 trades, and we're just going to go over my 3 trades, and then if anything else comes to mind, I'm going to tell you what's on my mind. So here we go. We open the market right here. Let's see what the 5-minute twins are showing us. 5-minute regular hours is going down. 5-minute extended hours is going up. These are not in sync. That means we're not trading. We're waiting for them to be in sync. Here's the 15-minute energy right here. Here's the 30-minute energy. Notice I'm saying energy because momentum and energy have a lot in common. The sooner you learn that, the better. Now, here's our alignment, okay? This might look confusing now, but once you get used to it, it makes total sense. Here's the alignment at this market open. 4 minutes into the market, this is the alignment we're looking at. So we're looking for upward opportunities because the 30 is going up. The 15 is basically going up. So we want to wait until the 5-minute twins align to the upside. And when that happens, it's time to take a position. That is exactly what I did. Right here, 5-minute regular hours is still not really going up yet. It's trying and it's beginning. Okay, so we have this huge move. Look at this. First of all, look at this. We hit previous day's low right at market open. The price action rejects away from previous day's low. It gets down a certain, we sell, and then look what happens. Boom, the most aggressive buying momentum. This is a foreshadow for the rest of the day. The most aggressive buying momentum and volume comes in. Skip forward, 5-minute regular is still not aligned to the green, not aligned to the upside yet. We're almost there though, we are almost there. Coming down. I'm waiting for the opportunity. This was almost an opportunity. But not yet. We're waiting. We are waiting. Now it's in the green. Look. This is a full alignment situation right now. 30-minute, 15-minute, 5-minute twins, all going to the upside. Now all we need is for our execution time frame to start going to the upside, and we have got a trade on our hands, ladies and gentlemen. This is going to happen. Not here. We're going down, up. No money. Money. Okay? So we go here. That was my trade. Simple as that. Enter at the close of the candle, stop loss at the bottom of that candle. You take profit at that first region, which is about a 0.6 R ratio. Not a 2-to-1, not a 1-to-1, sort of in the middle. My first trade of the day. Next trade of the day was right here. 5-minute pulling up, not going down anymore. We're pulling up. This 5-minute going up. Everything else strong. We get a volume confluence. Could have even entered earlier because of this bar break. Right here, this bar break that occurred. This bar breaking above the previous. But regardless, this was the volume confluence. We're on the right side of the momentum. It's as simple as that. You enter right here at the close of the candle, stop loss right below it, and you take profit at that 0.6 ARB. Notice this is the pre-market high, this red dashed line. Look how we're rejecting. Hit, reject. Hit, come up. Now we're consolidating on that pre-market high. Consolidating. consolidate, and then look what happens here. Look what happens right here. We start to take off. Look at the volume pouring in. Look at the volume. Understand how the volume it has a lot of information behind it when you see how price is playing around with certain critical levels. My next trade was here, my last trade of the day. It was here because the 5 minutes are going strong in the green. The 15 minute is no longer going down, it's actually going up now. A lot of these positions that I could have taken right around here, the 15 minute was going down at that time. So that wasn't appropriate, was not a full alignment. So here, we're in a full alignment. This is going up, execution time frame, 1 minute, or the 2 minute chart, depending on who you are, depending on what you like to use. I use the 2 minute chart in the beginning, in the middle of the day. I use the 1 minute chart in the beginning of the day. Everything is aligned to the upside. Had a volume confluence. We had a pop up, look, going down, down, down. Wait, boom, opportunity. Enter at the close of the candle. Stop loss at the very bottom of it. Take profit at that first level there, 0.6R ratio, and that was another win. We had a lot of other opportunities I could have taken today for trades that were just not as nice. And they all had high win rates, but I didn't take those. I only took 3 trades today, 3 trades, 3 wins. And with all that being said, I'll see you in the next one. Take care now.